What a time this is. The Fed isn't just in kind of a bind, a difficult spot. Global central banks are. Let's start with the Fed. Jay Powell opens the session, and what the world is waiting to hear is an affirmation that, yes, he's worried enough to leave the door open to a cut in September, or no, he's still cautious. He's going to wait and see. What does John Lipsky see?
It's very easy. No, for sure. The Fed's latest move, they said, was to recalibrate, essentially, policy in line with where they perceive the economy to be. And going forward, it will depend on, among other things, how the economic data develop, maybe how policy conflicts internationally could influence expectations. It's a complex environment, and I suspect that they are going to be definitely in a wait-and-see mode, but will react quickly if they see shifts away from their baseline expectations for economic performance.
Well, in the context of the Fed immediacy and rate cuts and signals, and a little more broadly, the context of the symposium, last year Jay Powell gave a very interesting speech about stars, our stars, and North Stars, and he really seemed to be saying, you know, we don't know what the stars are telling us. A year later, when you say, well, he's going to wait and see. However, he had said at the last press conference, one of the things he's worried about is low inflation. Is it incumbent upon him in any way now to follow through and let us know where he's leaning? Forget the rest of the committee for a minute, but where Jay Powell's leaning?
Well, I suspect the chairman needs to remain a spokesperson for the consensus on the committee. I don't think it would be helpful for the chairman to be saying, well, I think this. Maybe the committee won't agree with me, and maybe we won't do what I think is right. Although that's happened at other central banks, such as the Bank of England.
Yeah.
But the Fed's in a special place, and especially now, they need to project a notion of steady confidence about where they should be moving policy.
Okay, let's put on another one of your former hats. You were at Citi for many years.
Not quite, J.P. Morgan.
J.P. Morgan. Well, even better, right? J.P. Morgan. The economy, U.S. and globally. Look at the U.S. economy for us. If you were advising Jay Powell and his colleagues on what needs to be done now, how do you see the economy? What do you advise them to do?
Well, there are an awful lot of uncertainties, but look at the basics. The basics are that consumer incomes are growing at a relatively solid pace, that consumer spending is continuing at a relatively solid pace of not spectacular, but solid pace of improvement. Confidence numbers remain high, but an area that had been better and is now weakening is corporate investment. And for sure, extended weakness in corporate investment is not positive for the long-term outlook for the economy. However, it's not likely that monetary policy, short-term monetary policy, is an important variable in determining the investment behavior of U.S. corporations.
Are you saying the Fed has nothing it can do to boost the economy or boost inflation with short-term rates at this point?
Well, nothing to do, but you shouldn't expect the Fed at this time to have their hands on magic switches that are going to affect the broad economy in very short term. The area where you would think the Fed has the most effect, they don't seem to be having a problem. Consumers are doing quite well.